station of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Good afternoon, folks. Happy Friday, 3:07 p.m. Eastern Time. We got less than an hour left to go in the trading day, and you have markets just chopping around. Jobs Friday, so we get 22,000 jobs added. It's a weak number. You get revisions. We have negative jobs, actually lost jobs in the month of June. We'll probably get revisions on the month of jobs we just had of 22,000. No guarantee that that doesn't go negative eventually. Yields are trading lower, and the only possibility right now is whether the Fed's actually going to go 25 basis points or 50 basis points when comes time for the December meeting. September. This month. Coming up in 12 days. Right now, the market looking at about at least a 100% chance that they're going to cut. And of that chances of cutting, 90% probability they go 25 basis points, 10% chance they go 50 basis points. When you go out to December, okay, the market thinks there's about a 65% chance, and I'll just bring it over so you can take a look at it as we jump around. That's 3 cuts in 3 meetings, folks. 65% chance. 7% chance you get 4 cuts in 3 meetings, and 25% chance 2 cuts. There's a lot of cuts priced in this market as we're struggling on jobs. You jump over the 10-year, quite a spike to 113.21 right now. We're at 113.12. You get the 10-year yield at 4.09%. And so, yeah, let's take a look at the volume. S&Ps. Take a look at the daily. And yeah, you're going to have some volume today. You know, this is a Friday. It's a jobs Friday. We got an hour left to go, and we've already done almost 1.4 million contracts in the S&Ps. The biggest day on the way down was 1.7. We got a whole hour to go. You're going to get volume on the close. The last couple of days, you did 1.4 and 1.1, and we're already at 1.4. The NASDAQ, quite a candle. Let's take a look at the weeklies. You know, quite a tail on all these bars. We made all-time highs today, folks. 65.41, and just like that, we gave up 90 points. All right, we take a look at the dollar. So we're pushing the lower boundaries. When we're at 96.37, we had the 10-year yield at about 4.19%. 10 years at 4.09%. So we're coming for the 96 price area as these yields drop. 97.72 right now in the dollar. And we take a look at gold. So it's a big day for gold as well. We're going to break the highs, and we're going to do it with volume. What are you up to? 220,000. And you're coming into highs of 215. Now you have this huge expansion that we had on Tuesday. On a weekly basis, though. Yeah, the number's not in there, but it's going to be a huge weekly breakaway. I mean, look, just add up the days. You're talking about 220, 230, 220. So that's 670, 970, over a million. Over a million contracts in the 4 trading days we're going to have on gold. And that's going to be the most volume gold's done since May 19th and only in 4 days. Check that out. All right. And yeah, you got to talk about this one. Tylenol. So HHS, they're going to put out a report. And, you know, I was reading this one. I was reading what they're talking about in Bloomberg. among the potential causes of autism. I think I saw the word possibly many times in this. And nonetheless, there's going to be a report here that says that Tylenol, and especially during pregnancies, can potentially be linked to autism. And this is going to be a report of current information, though. This is not going to be like where they went in and did a bunch of research. So the report being prepared by HHS, and yeah, this stock KView is trading lower, which we'll get there. The report being prepared takes a measured approach, listing possible causes. That's what I thought, possible. I mean, they before this, and hey, I'll read the report, okay? But listing possible causes for the disorder and discussing what is known and unknown. Okay. And we jump over to that stock, KView. And yeah, that's going to have some volume. So you're down 11.3% right now. Look at this thing. Hey, let's see longer term. Technically speaking, okay, you have price support at about 18. That was your low of 2023. That was your low of 2024. What I always say about something like this, though, when you put an area underneath an equity where it's trading, you look for where an area could find support. Set that stop if you ever get into this one right now, because, I'm sure that's the last thing that they want going into a Friday, is being linked by a RFK Jr. HHS report for autism. Down by 11%. But yeah, you're bumping up against an area. So, you make this trade, you set your stop, put it tight, man. Put it tight. Right under $18. If you break below there, you're coming for the lows, and yeah, that'll probably get some attention. And, the tough part about that, okay, and this is just mixing feelings versus technicals, that's never going to go away once it's out there, okay? That's not something you can disprove, right? You can't disprove that it might be possible. So imagine that, because I was thinking about, you look at that stock, say, okay, if it's true, if it's not true, there's no way to disprove that it might be possible, which is what the report's going to say. So how do you refute that? You can't refute that, because it might be possible. All right. S&P's only off by 25. Look at the NASDAQ in positive territory. We'll take a look at Tesla when we get back. Tesla up by 3.3%, $11, trading at $3.49. We'll be right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We take a look at Tesla. So Tesla, they're talking about, how about it, $1 trillion pay package that would take Tesla to go into robo-taxis. It would take them to an $8 trillion valuation, and it would carry over 10 years. It's still quite a remarkable number, and it would reward him with $1 trillion, and I believe he'd end up with about a 25% stake. Now, this is some decent volume. You can't get above the recent highs, which would have been nice, because check out the volume. We're talking about 4 days, folks. Sorry, that's the daily, but yeah. This one would have been okay because we're on 4 days. But on the daily, we have volume today. Be nice to break the highs, though. Can't quite get above it, right? We were above it. We've fallen back. You got 40 minutes left, and we could get some action today with the action we've had. Don't underestimate this market when you get a slide like that. Look at that volume today. And finally, when the volume dissipated, the market stopped going down, right? Take a look at the NASDAQ. How's that for some selling? We take a look at the VIX today. All things considered, market just dropped 1.5%. Okay? S&P's dropped 90 points from where we were trading, highs to lows. Intraday, we're only off by 0.3%. NASDAQ's actually in the positive right now, so I understand it. But we got a VIX that's priced under the historical average right now. So where I find myself thinking is you have a VIX under the historical average. You have a market at all-time highs. You have an economy, in the short term at least, is showing some problems with jobs. Now, fundamentally, you can make the case June was negative, right? Maybe the volatility of peak tariff volatility of April and May, you had the 90-day extension. Things have calmed down dramatically since then. Back up 5 months ago, and I can't believe it was 5 months ago when we were in that April volatility, okay? And let me know if you do have sound in there, somebody in the den. Hopefully you do. And all of that April volatility leading up to September, right? Yeah, you're talking about now we have jobs that are not getting added. All right, thanks for letting me know, Al. And so maybe that volatility, maybe the June negative number is the uncertainty and the volatility around tariffs. And maybe this economy is still doing very well, and you're going to bounce right back. There is a distinct chance that the Fed's going to have to cut, though. and that this is going to take a little bit longer than that. We're going to get to see it play out. They're priced in some cuts, that's for sure, and this market is breaking away, man, in terms of yields. Now, I was talking about on the morning program, right? We archive the morning program, if you check it out. When talking about the morning program, I mean, it's remarkable if you look at the 2-year, which is ZT, where we're actually below in yield where we somewhat were last September. And then you take a look at the 10-year, okay, where we're not quite back to where we were. And then you take a look at the 30-year. And yeah, Houston, we have a problem, okay? The 30-year is at 116. Now, we're getting a pop right now, today. Today's a big day. Of course it is, right? We're up a full point and 16 ticks right now in the 30-year. So that's dropping dramatically with yield. But last September, we were at 127. You have dramatically gone lower price, higher yield. And keep that in mind because there's some push here, like the Fed's going to lower rates and our debt's going to be able to be pushed off, right? The Treasury Secretary Pesavento, he's talked about now's not the time to be issuing longer term duration, okay? Well, don't just think that we're going to get that opportunity. That's one of the things in this long, quite an illustration. I don't think a lot of people know, even in the market, that when you pull up the 2-year, the 10-year, the 30-year, how far off we are from where we were in September when you look at the longer term yields. It's a big number, man. Take a look at the S&Ps. About 1.4 million contracts so far. Check in on K-View, down 10.9%. Tesla up by 3.1. We check out Amazon shares down by 1.2. Quite a pop for Amazon yesterday. And you take a look at the weekly. It'd be really nice if we could have taken out all of this action, right? Even the all-time highs. Yesterday we were up to 236. Trading at 230, 289 right now. You're only talking about 4 trading days, okay? About 153 million. Some of the bigger and smaller days. Earnings. Even the week after earnings, we were doing 257. We're at 153 right now in 4 trading days. Microsoft with a little bit of a pullback going on. I mean, you talk about a pullback, man. How about 10%, just like that? Boom. Never think you know more than the market, folks. If you had told me, right? I mean, look at this. If you told me, check out this analogy. This is a good one that'll make you think, all right? If you listen to the program, folks, this is a good one. So Microsoft, man, they crushed it out of the park their last earnings, right? Azure, what were they growing at? 39%, something like that, okay? You come into those earnings at 513. We're now below where we were on Microsoft coming into those numbers, right? Let alone the huge acceleration you got, then you got to give back. Now, compare that to Amazon, okay? Comes into their earnings at about 233. They miss. You drive lower in a dramatic fashion. Their AWS numbers were 17% growth versus Microsoft at 39. And guess what? All you do is you trade higher. And actually, you're in a better position in Amazon before earnings than you are on Microsoft before earnings. Now, I'm not talking about afterwards even, right? Microsoft, you're now down $20 from where you were coming into those numbers at 515 to 494. And that's after crushing the world. It's a story of expectations. And Microsoft was on top of the world. You had just traded basically a straight line move from 245. You got the pullback earlier this year, and you did that move again. Versus Amazon had underperformed. Pretty straight line move, but you're talking about Amazon was at $180 in 2020. And I said you came into those earnings at 215, no, 233. So you're at $180 in 2020 versus Microsoft was at 220. Look at that, right? It's something that made me think because there's a lot of optimism when even on an earnings season like that, Microsoft is struggling. There's a lot of optimism and multiples priced into these equities, man, because they crushed it. That one was quite a divergence when you talk about Amazon versus Microsoft and even Google as well. Google shares, how about it? Another all-time high. You're now above the 1 to 1.618 expansion. Up by 0.9%. We jump over to Apple, another victor in that core case. Up about 0.1% right now. Yeah, Tesla up by $10. I don't know, down by 10%. Check in on gold. Up by $40. 40. I think that was my dad's favorite number. 40. Up $40. 36.47. Stay tuned, folks. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got gold up by $40. And how about in the world of AI, Anthropic? Yeah, we just talked about that they're just raising money at $183 billion valuation. And, this type of cash, but yeah, $1.5 billion for a copyright lawsuit. And this has to do with, okay, they have the amount of authors here. Yeah. 7 million books. 7 million books. So they take all these books. The case was brought as a class action on behalf of authors of 7 million books that the startup illegally used downloaded, pirated versions of their copyrighted text to train their large language AI models. Now, I'm sure the semantics of this get murky, right? Who's responsible for the brilliance of the AI system, okay? But yeah, it's a landmark event. You're talking about $1.5 billion that this company's paying. Now, what I will say is the company just got a valuation of $183 billion, okay? That would be like if you started a $1 million company and you had to pay a $1,500 fine. That's like literally, it's 1%, okay? $10,000 fine from $1 million. But as my dad used to say, the cost of doing business, yeah, the hearing, September 8th. Put it on your calendar. Some of the competitors have struck deals as well. Yeah, like the New York Times was in there, right? Yeah, New York Times over copyright claims. But 7 million books, $1.5 billion. Not bad. Jump over to Google. And you take a look at Google. This is quite an extension to all-time highs. You take a look at the weekly, and remember, this is 4 trading days, folks, okay? A daily basis, that chord victory, yeah, it was a big one. And you average out this volume, it's the biggest weekly bar we have on this chart going back to February of 2023, if you average out the volume. Because we're at 152 million already. And the highest numbers you have out here are 187. So if you're at 152, right? Yeah, you divide that by 4, times it by 5. Yeah, it's the biggest weekly volume we've done going back a couple years. More than that, to the beginning of 2023. So that's strength, man. That's how you do it on a weekly basis. Now, on a daily basis, the strength might be ending, or at least consolidating at this 1 to 1.618 expansion, right? You gap higher, you get up to a high on Wednesday of 231.80. And that was your volume. And each day we've closed above it on less volume. But I wouldn't be looking for a big pullback on Google right now. Not with that type of volume. And hey, that's remarkable to say when this one basically is a straight line move. I mean, yeah, you got a little bit of a pullback, right? In June. Let's just see what it is percentage-wise. Yeah, right at about a 382. Look at that. Right, the 236, the 382. We pull back, we touch that area, and then you do a 1 to 1.618 expansion. Whew. The wealth creation, folks. You know, we had wealth destruction earlier in the year. But the level of wealth creation, the likes of NVIDIA, right? Whew, NVIDIA, almost $2.5 trillion of wealth created from a period of April to August, 4 months. What's remarkable is Microsoft had no pullback to even do a 1 to 1 point. There was no expansion, right? You look at Google, that 1 to 1.618 expansion I'm showing you, you had a pullback in Google from June 11th to June 24th. The only reason you can't do anything on Microsoft is that was your area on Microsoft when you had Google pulling back. There was no pullback whatsoever in Microsoft when you traded from 345 to 555. Look at the move today, man. You're getting a move with Microsoft. All right, we got volume at the highs, though, on a weekly basis. Give it up a bit, though. Let's see. Put it back on a daily. Where are we trading back into? You know, the start of the year, 452. That correlates to where we were, almost the highs of 2024. You know, we just traded from 555 to 493. Not outlandish to look for the $40 area in terms of the potential to pull back an additional $40. Tesla up by 3%. And yeah, this Hyundai site, in the heightened political atmosphere we live in, it's going to get a lot of attention. But it is remarkable when you talk about this type of array, this type of numbers. And you have a large Hyundai site in Georgia. This involves South Korea, of course. Hyundai. 475 people arrested. More than 300 with South Korean nationals. Those arrested had illegally crossed the border or entered through a visa waiver program that prohibited them from working or had overstayed their visas. And that's the special agent in charge of Homeland Security investigations in Atlanta. They're talking about this is a months-long deal. Now, this plant... They have it in here? Yeah, the factory is being built by a joint venture between South Korea-based Hyundai Motor and South Korean battery manufacturer LG Energy. $7.6 billion Hyundai complex. 8,500 people is what they're going to employ. I thought it would be a bigger number with everything they're talking about, but 8,500 people by the year 2031. In 6 years, 8,500 people. But... hey, we'll finish that conversation up. S&P's off by 24, NASDAQ off by 3. I'll be right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Forgive me. Somehow the button got hit. Thank you. So, $1 trillion pay package, and you better believe that it was a high-stakes deal. And Elon, you're not going to believe it. You're not going to believe it, folks. But he threatened to quit. And, of course, he threatened to quit. And, listen, that's not a knock against him at all. It's the highest-stakes negotiation you can have. Made a genuine threat to quit in Tesla's $1 trillion pay package, and I believe it. And maybe he was going to quit, okay? But the tough part about this as an investor, right, is if you're investing in Tesla right now, folks, you are taking a tremendous amount of risk. You might get rewarded immensely, as many times you have in the past with Tesla, but you're taking a tremendous amount of risk. This is a company that is not valued at $1 trillion off of the fundamentals, okay? It is a growth stock predicated. I think Elon said something like recently that 80 or 90% of the value in the future is going to be on robots. They don't even have a robot that they sell. That's a pre-revenue play. That's a pure play. Where's that come from? It's a pure play. Pre-revenue. Don't go after revenue. You go after revenue, they're always going to ask you how much revenue you have. You have no revenue, they can't ask you how much revenue you have. It's a poor play. It's a pure play. I'm quoting a show for anybody out there. But what's tough here is and listen, I get it. I don't know what happens with Elon, okay? But $1 trillion in the future, over even a period like that, it's a pay package that, listen, folks, my dad used to say it all the time. He's coming up. He's on my mind a lot tonight, I guess. But, listen, you start a company, all this stuff, but we're talking about paying employees $1 trillion by publicly traded companies. To do that, right, he needs to be that far ahead of everybody else. Now, here's where it gets the most difficult, okay? He's all over the place everywhere, no matter what. And he has basically an endless option with zero risk. His risk is his time, and there's nothing like time, okay? But to take all of those future gains to the tune of $1 trillion, you could make some very outsized cases that, there's only one Jamie Dimon, right? And how much is he worth? Well, you're worth more than the next guy. And Elon is a transformational figure, folks. And there's only one Elon, so I get it. But I really hope that $1 trillion pay packages don't become the common for these multi-trillion-dollar companies. Because you could make that same case that the value they're adding is worth it, right? Well, what's the problem of paying me $1 trillion if this company I'm running is going to make so much money in the future? Well, that's great, but maybe that's the trajectory that the market's on right now. And he's going to reap 1/8 of the rewards. If this company goes from $1 trillion to $8 trillion, there's a tremendous amount of risk built into that across the board. And yeah, you start a company, you're damn right. You keep all those shares, whatever it is. But when you start talking about paying employees of publicly traded companies, and then it gets into that on the same thing, and I'll find the article this morning, folks, okay, that they're putting to the shareholders whether Tesla can invest in XAI. So you're going to pay an employee $1 trillion to be CEO of a company, and then you're going to have that employee take company funds and invest the company funds in their privately held business. I mean, come on. I love Elon sometimes, and I can't stand him sometimes, okay? But if I told you that story in a vacuum, folks, please be listening to me. Chime in. Tell me why I'm crazy, okay? If I told you, now this is how you become the richest man in the world, so kudos to him, okay? Don't hate the player, hate the game. This is the game, all right? But I'm talking about it because he's got the biggest meme army, followers, rightfully so. He's transformed the world in tremendous ways. But when I look at that and I say, man, he's going to get $1 trillion pay package, and now he's going to use Tesla money to invest in XAI, which is a private company, okay? That is a private business. That ain't your business, okay, Tesla shareholders. That's Elon's business, not yours. So that's where I really get, lost in terms of, okay, really? The only way that Elon's going to stay at Tesla and be allowed to invest Tesla money into XAI is if he's paid $1 trillion as an employee. The life of Elon. And yeah, hey, he knows how to get things done, folks, okay? And he might hit those benchmarks. But I've heard, many. Anyway, it speaks for it. $1 trillion to be an employee for 7.5 to 10 years. Ford up by 0.4% right now. Let's check around to some of the Magnificent Seven. Apple shares hanging flat. Google shares up by 1%. Amazon slightly in the red. Meta up by 0.6%. And yeah, Microsoft, the dog today, down by 2.8%. CRM up by 2.4%. They had some tough earnings on Wednesday, but look how quickly we are. Right, that's back to where we were trading earlier in the day on Tuesday and almost where we were on Wednesday. Salesforce up by 2.5%. Oracle got layoffs in focus, up by 4.5%. Now this thing's been a rocket ship, man. Whew. Almost the same with Microsoft here. Almost the same with almost the whole market. There was no pullback whatsoever. You had a little shimmy, not even a pullback, right? A little shimmy in June. Yeah, 233. Let's check out the volume. Yeah, quite a little doji spin and top here forming in this market. S&P down by 24. Nasdaq's got some volume. Look at that volume today in the Nasdaq. Let's check out the Qs. Man, Jimmy, I don't even know what you're talking about. This is so crazy. I just talked about $1 trillion. Folks, it's $1 trillion. It's not a million. It's not a billion. It's $1 trillion, baby. He's talking about most CEOs make millions. Yeah, most CEOs make millions. They don't make trillions. Come on. Come on. Let's not. $1 trillion to be an employee. And at the same time, to use company funds to invest in your own private business. Don't forget about that part. Okay? Most employees do not make $1 trillion to use company funds to invest in their private businesses. Do they do that? Did I miss that one? Let's get it comparable. We're in a different stratosphere, man. All right, S&P's off by 27. NASDAQ, ooh, look at the NASDAQ going green as we speak. NASDAQ up by 1. We got 10 minutes left to go on the trading day, folks. We got one more segment. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And listen, I love the conversation about Tesla, okay? Because they know their argument they're making, which is that everybody makes out, so what's the big deal, right? It's target-based, and I understand it. I'm not even, it's knocking it. That, yeah, the shareholders can't be harmed when they're only having to pay a percentage of their gains. But that's not taking future gains just because you're not going to put them in a losing position doesn't mean that it's equitable and fair in comparison. Now, Elon has something like I think 17% of Tesla still. Okay? Tesla right now is a $1.13 trillion company. So what's that put his Tesla ownership at? 175, almost $180 billion. Just his ownership in Tesla alone would make him almost the richest man in the world. I think Musk is first, of course, and then you have maybe Zuckerberg at like 215 billion, Bezos at 215. Just Elon's stake in Tesla makes him almost the wealthiest person in the world. And the only way he's going to stay there, he still has that much in Tesla. Okay, that's the other side of this. So usually that's an incentive that most, like where is that part of the conversation, right? When Elon's like, I'll quit. And I guarantee he said it, okay? And there's nothing wrong with that. Well, he has almost $180 billion of his wealth tied up, and he's worth double that, okay, when you add in everything else, in Tesla. $1 trillion, just because it's a percentage of future gains, folks, doesn't mean it doesn't hurt anybody. People investing in Tesla, rightfully so, okay, they're taking a tremendous risk on the future there. Doesn't mean they should just have to give up future money to Elon because he demands 25% when he'd be the richest man in the world almost, just with his position already in that share. Because if that starts happening, there's no line in the sand, man. And Tim Cook's a CEO, just like Elon is. He is there for profits, just like Elon is, okay? Just like Zuckerberg is. All of them. Folks, have a great weekend. Thank you so much for tuning in. Have a great one, safe one. We'll see you here Monday morning, folks.